Hello, everyone, and welcome. Thank you for joining us today. I'm Olga Makarova, a marketing manager at COFAS, and I'll be moderating today's session. In the next 45 minutes, we'll start with a quick global outlook to frame 2026 and then move into focus sector deep dive. I'm joined by two speakers today, Simon Lacombe, our sector economist, and Cyrine Le Breton, a product marketing manager. And together they'll walk you through the key risks in 2026 with a focus on agri-food, automotive, and global trade competition. We'll also include a short live through demo with concrete examples of how to use country and sector risk assessment in practice. And while we're waiting for everyone to join, please let us know which countries and regions and sectors you do business with to give us an understanding what would you like to hear in this webinar? And while you're putting your responses in the chat, I'm going to give you a few quick housekeeping notes. So the webinar will last for about 45 minutes, including questions and answer session at the end. So throughout the session, please feel free to send your questions in the questions tab or in the chat, and we'll collect them and cover them during the Q&A session. And we'll try to answer as many as we can. And I see that we have some answers already coming. Yes, hi, we're from Romania, automotive trade. That's great. We'll keep watching out for the chat answers and we'll cover that later. And before we begin, I want to have a sense of your main concerns regarding the global outlook for 2026. I'm going to send you a quick poll and you will see on your screen. We appreciate you answering. You can choose several answers at the same time. And while we're collecting the responses, Serena, I'm handing over to you.
Hi, good morning, everyone, or good afternoon, depending on where you're dialing in this morning for me, at least. Thank you, everyone, for joining us. So I will do a very quick intro as to who we are within COFAS. But first, let's see a little bit, the poll answers. So what global factors worry you the most right now? So 35% of you said geopolitics, and 26% of you said trade wars. So that's great. Simon will be talking to us about it later on. And then we've got 14 for supply shocks, 14 as well for AI disruptions, and 9% for social unrest. So thank you so much for participating. And it's great to hear that these are all concerns because we'll be tackling those topics this morning. Moving on. So who is COFAS for anyone who doesn't know us? So we're a global leader in trade credit insurance and business information. These are our two core businesses. We've got a heritage of we're celebrating our 80th birthday this year. So that's very exciting. And we empower businesses with over 715 billion trade credit insurance over 200 countries. So we're definitely a leader in this business. We have very strong financial foundations with great ratings from Fitch, Moody's, and what's really important is that we're a very global team with local expertise. So we have about 300 experts in underwriting that bring us insights and decision enhancing our different platforms every day, allowing us to have real-time strategic decisions. And we have about 100,000 clients as well that rely on COFAS. And as you can see at the bottom, we're trusted by very big companies such as Bosch, Boeing, Mercedes, Dassault, and more, and many more. So I'm going to be handing over to Simon now, just so that he can dive into what you're all here for, which is information on the economy, agri-food, automotive, and trade competition. So over to you, Simon.
Thank you, Serena. Thank you, Olga, and good morning, everyone from Paris. Maybe let me begin with an overview of the global economic environment, as we already are in Feb, almost March, but we enter in 2026. Um, Globally, 2025 unfolded in line with our expectation, economic forecast. So global growth stabilized at around 2.8%, despite a year characterized by political turbulence, policy uncertainty, and major geopolitical events. And so, what appeared to be a paradox in 2025, with basically a stability in growth despite rising global volatility, this paradox can be explained by two key factors. First, the intensity of the shocks feared at the beginning of the year, so at the beginning of 2025, finally turned out to be less severe than expected. And the second point is that the global economy, once again, finally, showed its ability to adapt quickly, even in an environment marked by an elevated uncertainty. If you look at our chart here, you see that the downside risk prevailed in 2026, especially with geopolitical risk. And so, if we turn to the geopolitical dimension, it has been particularly intense over the past few months, even in 2025, but even in the past few months in Jan and before. Since January, we have three countries that have dominated the headline: Venezuela, Greenland, and Iran. These developments around those countries were amplified by a rapid succession in decisions from the Trump administration, basically. And this development revealed one thing. It reveals a more assertive US posture on national security issues, with globally the intention of maintaining the supposed US spheres of influence across Latin America, the North, and the Middle East. This kind of development is likely to produce further policy uncertainty or unpredictability as we move toward two key milestones this year, so in 2026, this Sino-US, the Chinese-US summit in April, and the US midterm election in November. If you look more carefully to this chart, you see that we have also macroeconomic and trade risk in our balance, with trade tension that escalated in 2025 and continue to reshape the global landscape. So the series of bilateral agreement that emerged in 2025 has challenged the traditional role of the World Trade Organization, for example. Meanwhile, at the same time, China continues to leverage his strategic dominance on supply chain, especially in critical mineral and rare earth. For Europe, in the middle of the US and China, this combination of pressure, so commercial pressure from the US with tariff, industrial pressure from China with all the oversupply issue in EVs, in steel industry, etc., and the persistent security risk linked to the conflict in Ukraine, the war in Ukraine. All this pressure mean one thing, that Europe needs to make difficult strategic decision on resource allocation in 2026 and 2027. Sorry. In addition, in this chart, you see the macroeconomic risk as well, and it will remain elevated in 2026. Can you? Yeah, you still hear me, Serena? Just to confirm. Yeah. So the US policy, economic policy especially, will continue to be a source of uncertainty in our world. The possibility of renewed trade hostility, And in fact, when we look at what happens worldwide, we see that the international competition is intensifying.
Oh, Simon, I think we lost you. We cannot hear you anymore. Sorry, everyone. Just bear with us for
Can
one
you hear me?
second.
Can you hear me
We
now?
can hear you now.
Oh,
Yes.
sorry about that. Sorry about that. And so, and on the top of that, sorry, we can add structural risk linked to climate change, financial risk linked to high debt levels or persistence of higher interest rates, etc., etc. Given all this how can I say, adverse condition, we expect global growth to slow slightly in 2026 to 2.6%, as you can see on our left-hand chart. And you can see like a deceleration, and this deceleration is almost entirely due to China. China grew by 5% last year, supported by strong export, resilient industrial output, etc., etc. However, during the second half of the year of 2025, we observed a domestic demand decline. The consumption has been constrained by a soft labor market and only modest public spending or social spending, etc. And so that's why we expect declining GDP growth in China to 4.4% in 2026. And if we look at the US, you can see on the right-hand chart, if we look at the US, by contrast, we expect that US will remain relatively resilient in 2026. So finally, despite major tariff shocks, most of the cost continued in 2025 to be absorbed by firms rather than consumers, meaning that it explains two things. It explains why inflation in the US remains finally lower than anticipated, and why the domestic activity, the domestic consumption, has been sustained in 2025. Nevertheless, we expect that the negative impact of tariff will materialize this year on the US domestic market. So the negative impact we expected last year, finally we observe a lag in the penetration of the transmission of the negative impact to the US economy in 2026. If we look at Europe now, you can see that the outlook depends on country. In Germany, you can see that after several years of contraction or stagnation in 2025, we expect a modest rebound in Germany, thanks to thanks to a very large fiscal package, basically. So we expect 1% of GDP growth in 2026 in Germany. In France, as the 2026 budget has been voted recently, it reduces the political uncertainty, even if the fiscal outlook remain quite fragile. But the growth should be stable in France. You see 0.9% in 2026, same in 2025. So it remains quite stable in France. In the south of Europe, we have Italy and Spain. Italy, we expect a slight growth of GDP from 0.7 in 2025 to 0.8 in 2026. The most dynamic economies finally in Europe, in Western Europe, is Spain. Even if we expect a slowdown in 2026 from 2.8 to 2.5% of GDP growth. The economic growth will remain resilient and robust in Spain, mainly supported by strong investment, partly due to EU funds, and also immigration, which fueled the labor market. So what does it mean concretely for 2026 and for businesses? The short answer is clearly that uncertainty will remain the dominant topic, the dominant risk. You have seen that the first week of the years have shown one thing: the tariff remain key. The tariff remain a central policy tool for the US, for China, even for Europe, and so the global environment, the global economic environment, will remain highly unstable, as you can see on our left-hand chart. If we look at the more specifically to the insolvencies on the right-hand chart, you can see that corporate insolvencies continued to rise in 2025, particularly in Asia Pacific and Europe, and that the trend has been stronger in the US than the years before, especially from the second half of the year. And so for 2026, we expect insolvency to rise. We expect insolvency to rise in advanced economy by around, for example, 3%. So it pushed levels to more than 25% above the pre-pandemic average, meaning that we face a really hard momentum regarding insolvencies. I will turn now to the sector part of this presentation, and first the agri-food sector. I think if we have to highlight something about the agri-food sector, especially the upstream part of the value chain, is clearly the two-speed dynamic in the sector. We already at COFAS highlighted last year this two-speed dynamic between cereals and non-cereal commodities. First, we have cereals. This part of the sector benefits from a huge production, increasing output, grains output with a production surplus. And according to FAO, so the United Nations Food Association, we see that their forecast for global cereal production rose by 2% in 2025, and we expect this production will rise by 1 to 2% in 2026. So it will surpass all its previous record regarding the global, so worldwide global cereal output. Two regions will drive this increase: Asia and Latin America. The outlook is a bit gloomy by contrast in Europe and North America, especially regarding wheat production. On the other hand, we have the non-cereal commodity. For these commodities, such as cocoa, coffee, sugar, palm oil, we remain more cautious because those commodities will remain under supply pressure. We flag many bottlenecks in producing country, which will continue to limit supply. Just to add another word about agri-food and crops output. At COFAS, at the Economic Research Department, we think that weather will be also a key variable in the months ahead. We have the latest forecast from the World Meteorological Organization indicate that 50 to 60% of probability of occurrence of El Niño could be by the end of the year. Just maybe as a reminder, what is El Niño? I'm not sure it's very clear for everyone here. El Niño is, to be very an easy definition, it's a large-scale oceanic phenomenon. It means that it brings drier and warmer weather in all the Indian Pacific region. So in South Asia, Southeast Asia, Australia, Southern Africa, Latin America, etc. And if this phenomenon uh, is confirmed by the end of the year, we should expect negative impact on crops output in 2027 in all this region. So meaning that, for example, for instance, the wheat, rice, or sugar crops in India will suffer of a weaker monsoon activity, or soybean and corn production in Latin America will suffer of drought and heat wave, for example. And so, yeah, that's why it was a risk I would like to highlight here today. With no really transition, we switch to the automotive sector, the second and last one. So globally, the automotive industry will continue to face strong headwinds. We observe that car sales should grow by 2%, 2.5% this year, so pushing total volumes above 90 million units. So it's increasing basically, but the environment is becoming increasingly complex. The value chain, for example, continue to fragment. China, US, Europe. The tariff from the US are reshaping the global trade flow, and the trade restriction can fragment also the supply in the value chain. One thing to add, the pace of electrification in the automotive industry is becoming increasingly uneven across regions. So, for example, with China export restriction on rare earth, it creates a lot of additional challenges, especially since China controls about 90% of the refined rare earth output. So we have a very fragmented automotive industry right now, and it will increase in the coming months. If we look at maybe the figures in Europe, the good news is that passenger car sales, finally returned to growth in 2025, plus 1.8% year on year after a few years of decline. EVs, so electrical vehicles, continue to drive the momentum, and plus 21% year on year of sales. And we expect it will remain strong in 2026, around plus 15% for this year. That said, the regulatory environment is becoming in Europe less predictable, with ongoing negotiation on emission rules and the end of the 2035 all electric vehicle target, meaning that it could first likely slow the pace of EV expansion, and it creates uncertainty for the car makers and suppliers. And so the cyclical improvement with the increasing car sales doesn't change basically the structural difficulties. And we point that weak order books and production challenge should continue this year to impact the automotive European sector, especially the mid-size supplier that we flag very at risk. And just to conclude my presentation and the automotive part, we will have a look at the US market, one of the biggest one. And so the US automotive market will face a lackluster year in 2026. First, the tariff will remain a major risk. JP Morgan estimates that tariff-related costs could reach about $45 billion this year. So it means like $2,000 to $3,000 per vehicle. That's huge. And this cost will be shared, sure, between manufacturer, but increasingly by consumers, meaning additional pressure on consumer price. And with higher price, this higher price will automatically impact the demand. That's why we expect sales to grow only modestly, around 1% year on year. That's very low for the US automotive market. Um, and on the production side, just to finish here, the picture isn't much better, as we expect the same growth pace, around 1 to 2% for the automotive output in the US, reflecting the softer demand and the persistent, how can I say, supply friction. I let the floor to Serena, and I will be more than happy to take your question at the end of this presentation. Thank you.
Thank you, Simon. Thank you so much. So with all of this information, we're going to dive into a real life example within the Urba 360 platform. So just before we dive into the platform, a little bit of a reminder, or if anyone is unfamiliar with Urba 360. So Urba is one of the core businesses at COFAS. So within the business information, we have this lovely wheel with 6 different predictors. So you can see the score, which every company will have. So it's a probability of default over the next 12 months. You have the credit opinion. So how much should you offer credit limits to companies? We have the financial ratios, late payment indexes. So this is based on real-time payment experience that we experience at COFAS through our trade insurance business. And then you have the 2 sector and country risk assessments, which we're going to dive in right here. So all of these data points are color-coded, so it's very easy and interactive and intuitive as well as a platform. And it allows users to have a descriptive, predictive, and prescriptive information as to how they should, how we would recommend doing business. So let me share my screen, and here we go. All right, Simon, can I just get a thumbs up if you can see my screen properly? Okay, I'm assuming yes. Okay, perfect. So welcome to Urba 360 as a platform. So here I'm going to type in the country that I'm looking for. So in this instance, we'll do Austria and KTM. So I'm going to search in, and as you can see, I already have the company in my portfolio, but there are many instances of other KTM companies in Austria. So let's dive right in. So as I said, within the Urba 360 platform, you'll see a lot of information. So the 6 different information that we just mentioned, you'll have some general information about the company, and then as you go down, you will see all of the different information that you can then click in. So let's start at a more macro level and dive into the country risk assessments. So for KTM here, Austria is considered a A3 level, so a satisfactory risk. You can see that it's on the scale of A1 to E, so from very low risk to extreme risk. So A3 here means that it's um, politically stable, that the business climate may have some shortcomings, but that the average probability of a company default is satisfactory. So this assessment is based on 6 different factors. You can see here, they are, if you ever need a bit of a reminder of how we calculate this risk. So it's based on our macroeconomic assessment, our banking risk assessment, environmental risk assessment, business risk assessments. So that's how easy it is to operate in a business in the country. Political risk assessment, which is very important, as Simon said previously, and also payment experience. So again, based on the records that we see within COFAS for a trade insurance business. Um, so if you go down as well, you'll be able to see the history of the assessment. You can see here that it ends in Q4 2024, and that's because the company unfortunately went bankrupt. So we stopped looking at the history from that point forward. But obviously, if you look at another company that is operating currently, you can see that it's up to date. And then if we go into the sector section of the wheel. So it's just a very quick click away. And here you can see that Austria and Western Europe in general, this specific sector, so the motor vehicle, motorcycle equipment is at a very high risk. So again, as Simon explained before, it is a very high risk company. Sector, sorry. And so this is based on publications that we do on a quarterly basis at COFAS, or that Simon and his team do on a quarterly basis at COFAS. So it's on 13 different sectors across 6 geographical regions, and it relies on 3 key pillars. So the data that's relative to our expertise on corporate payment behaviors, the forecasts on financial data, and then multifactorial data such as the evolution of commodity, price forecasting, risk linked to structural changes that happens in the sector, but also in the country of this particular sector. So here, what I find really interesting is that although KTM was operating in a relatively stable country, you can see that actually the sector risk assessment was giving us a bit of a intel around the health of the business and why it was maybe really important to be careful around um, negotiation and how they should operate with their different suppliers. Again, what's really great about Urba 360 is that you can see again the history. So dating back to Q3 2020 all the way up to the bankruptcy. So you can see that it was always on the watch. So it was always a very high level risk, and then it became a very high level before it finally went into bankruptcy. I believe Q1 2025. So we were able to predict that the company was not doing very well, unfortunately. And then same, you also have the Western European regional history as well, just to give a little bit more of a flavor as to how the company was doing. So yeah, just to connect the dots here, you can see that within Urba 360, you have these, sorry, let me go back here to the general information. You have the general wheel, so you can click on the different segments of information that we're able to cater for. And although one part of the wheel might be green and looking good, it's really important to see the big picture and see the different other areas that might be at risk for your company. So I will stop sharing my screen here. There we go. Um, so if I go back on the slides, thank you, Olga. So we will send all of this information afterwards so you can have a little bit more of a deep dive within the country assessments and the sector risk assessments. But how practically should you use these insights as well? I think that's the $1 million question. You can use these insights not only for risk assessment, but also for growth. So you can obviously strengthen your risk management by understanding the context around each one of your business partners. But you can also view Urba 360 as a growth tool by giving it to your marketing team so that they can explore green zones, for instance, to your sales teams so that they can avoid getting into deals with companies that are at a very high risk of default. And also procurement that it can explore supply chain resilience. And really just to see a bigger picture on the score, the credit opinion, the country risk, and every piece of the wheel. Um, so key takeaways. I will pass it back to Simon for his key takeaways on the economic insights.
Yeah, so just to be quick, Serena, after we will take the question, I guess. Yeah, a few takeaways. One word for 2026, uncertainty. I guess is the most relevant word for what is coming. The slower growth, of course, it will have an impact on the demand of the consumption, on the company's sales, of course. Limited pressure on agri-food. I think we have to more to focus on manufacturing and on the automotive, especially for if we look at risky sector. I mean, and of course the increasing of corporate insolvencies will continue in 2026 and reach record in the coming months.
And then my takeaways from this webinar as well. So really how to use the country and sector risk assessments. So you can create heat maps really to understand where your key markets, customers, suppliers are mapped by country risk and sector risk, to be really proactive in how you deal with third parties. You can flag hotspots. Enabling you and your teams to review higher risk areas that deserve a little bit of a closer attention, and also updating signals. So the really great thing about Aurora 360 is that you can monitor your company. So any changes that happened are being monitored. So you will get a an email or within the platform itself an information reminder that you need to take a closer look maybe at some changes that are happening. Obviously, all of these changes will depend on how you operate as a business, the industry that you're into, and your risk appetite. The more information, the better. Yeah, so thank you very much for listening to us this morning or afternoon, depending on where you are. We're happy to take any questions that you may have in the chat. Thank you.
Thank you, Serena and Simon. I see that there were already a couple of questions in the chat regarding Germany, and I know, Simon, you've been answering them, but perhaps some of our attendees would like to hear what you have to say about these topics.
Yeah, maybe on the automotive in Germany, in Central and Eastern Europe. I think the as I told in the chat, I think what happened in Central and Eastern Europe shows how quickly the thing is shifting in this region, especially in automotive sector. I think the biggest game changer is the electrification. So even if the EU Commission postponed the 2035 deadline, personally, I think that electrification will remain a game changer and will remain why things move in the automotive sector in Europe. We see that Poland is positioning like as a hub for EVs assembly, and we see that Chinese invest a lot in Hungary, but in Serbia as well, to develop battery plants and to can I say to enter the European market with Chinese EVs. So I'm sure things will move in Eastern Europe, and we will see losers and winners. And regarding the difficulty of the German automotive sector, maybe it will be there will be losers in the upstream supply chain in Eastern Europe.
We also got a question, Simon, from Alexa. So you mentioned insolvencies rising. Are we seeing this mostly in SMEs or also in large corporates?
It's in all size companies, but what we can see is that the number of jobs concerned by insolvencies or the size of the turnover concerned by insolvencies are bigger and bigger, meaning that the company facing insolvencies employ more people and have a bigger turnover.
Okay, Serena, I think we have a question for you.
Yes.
What should we do? Yes, go ahead, please.
So, what should we do when a key customer is getting riskier, but we can't stop trading with them? So, that's a really great question. I think the first thing that you should do if you're an Urba 360 customer is getting them monitored as soon as possible so that you can see whenever there's a change. And then, what you can do is talk to them about payment terms, for instance, and negotiate that with them a little bit closer. You can talk about size of trade maybe and negotiate terms a little bit more closely because you have this information. I would say it depends obviously on your risk appetite. It depends on the context as well, but you can also take this as an opportunity to diversify also your customer base and just make sure that maybe you're not putting all of your eggs into one risky basket.
Great, thank you, Serena. I saw one of our attendees typing the question, but there's no more questions coming. Let's wait for a little bit in case there will be more to come in. Otherwise, we will be wrapping up. Okay, I think that's it for today's session. There's no more questions. What do you think, all of you, for joining us? And of course, great thanks to Serena and Simon for giving such a detailed walkthrough. Everyone is more than welcome to download the presentation that you're seeing on the screen. And we would also follow up with the webinar recording. And please stay tuned on the upcoming events where this is the beginning of webinar series. There'll be more to come. Thank you very much again and wishing you a great day.
Thank you
Bye.
for joining, everyone.
Thank you very much. Bye bye.